Good weekend, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Friday. Yep, it's Good Friday, April 7th, 2023. Now, strange day today. You had open in futures markets, the stock indices, the foreign currencies, the bonds and notes. That's it. All other markets closed, stock markets closed. I had clients long going into the report today, the S&P, and I decided on Thursday to come out. I don't like trading a market that's got thin trading, most people not paying attention, could have gone any crazy way at once, and there aren't a lot of trades there, so all of a sudden, how do you do anything? I mean, it closed at 8:15 in the morning Central Time in the stock indices, just a little later in the currencies and the bonds. Now, the report, let's talk about that, and then we'll come back to all this. If we take a look, the monthly non-farm payroll is 236,000. The unemployment rate falls to 3.5%. I'm of the opinion this report locks in a quarter-point hike, barring another banking incident that suddenly shows up between now and the May 3rd meeting. That's when the next FOMC meeting is. Barring some other event happens. Could be away from that particular banking event. You know, sooner or later, I believe commercial real estate is going to be a problem. And you'd have to do something dramatic in CPI to take the Fed off keel. All right, I don't think that's going to happen. So I still think the Fed goes a quarter point, and they may even go another quarter after that. It's hard to tell. I do take into account, and this is why I think you have at least one more rate hike. And then I think, if I'm right, and Mr. Bullard, St. Louis Fed president, is not, that banks are going to tighten up enough to be the equivalent of 50 basis points worth of tightening. He doesn't think banks with all this are going to tighten. That's what he said yesterday. I so disagree with him. I'm a businessman, not a banker, and I can't imagine you're going into that bank. Let's assume you own a piece of commercial real estate, because that's where I think the next problem is. You go in, hey, I'm running at a 70% occupancy. I'm barely breaking even. I got $1 million note with you. I got to roll it over. You think that banker wants to roll it over? I don't think so. Might he roll over part? He might. Does he want the building back? He doesn't in this market. If you can't make a success of it, what's he going to do with it? So maybe Mr. Bullard, that's his thought process there. I happen to think bankers are looking around from left to right, and they're going, like I think, there could be another shoe that drops. I want to hold on to what I've got. I've got to be ultra-conservative until this thing's over. You may not agree with that thought, but that's where I think it's at. I'm impressed with the hourly earnings. They keep falling. So no longer are you paying up 5.5%, 6% jumps, and we saw that. Now it's 4.2% year over year. I'll bet it falls under 4 very shortly, and the Fed will applaud that. They'll be very happy. The participation rate keeps climbing. That's good news. More people coming into the workforce, and that's a lot of people there. So that's good, all right? And you're getting a little less in the payroll sectors, the private and the government this time around. If you looked at who's getting jobs, they claim, and I hate that they break it up this way, but they do. Whites, pretty flat, but increases in jobs in the Latino community and in the Black community. Okay. Let's go on, if we could, and take a look back at the chart. So in looking at the charts, again, these markets weren't open today, so it's hard to do, but these were. And what did the bonds and notes do? They fell. So they viewed the report, I think, the way that I did. Why the stock market rallied on it has me scratching my head. I don't get it. Again, I think the naysayers just look at anything and they go, it's another report and we're so close to where the Fed's going to stall out and pivot, it doesn't matter. I think that's the thought process they have. When we look at the gold market, you finished up on Thursday for the week and you were up 2.18%. Impressive. Now, I had marked off for you last week, 209.8. And you can see you're right in that zone. You're about $2 higher than it on the close. But this is the resistance zone. It pops through, new all-time highs coming then. So I'd be watching that. Pattern, higher lows, higher highs. Bullish until the market takes out 1945. Resistance, none of the moving averages. Bullishness. Once you got a crossover, you again made a new high. Do you believe in crossovers yet? Remember, I was prepping you as these were happening. Resistance right here, the Bollinger Band. What are the odds of closing strongly over the Bollinger Band and staying there? Very slight. Have you done it before? You did. Did it for 4 weeks, and then there was hell to pay, so to speak. The odds are you don't do it. 5% of the time you close outside of the Bollinger Bands, the top or the bottom. Gold-silver ratio coming down, which means silver coming up. I think silver will have its problem now in the 25.58 to 25.60 level, wherever that Bollinger Band comes in. It's overbought. It's been a heck of a run. I'll wait for the next pullback in the market. In the copper market, copper is just drifting on the weekly chart against the 18-week moving average of closes, trying to make something out of nothing. I have one client that's mad at me all the time, one of my subscribers, because he wants me to answer things on copper that I have no way of answering. There's nothing to do in copper. He wants me to tell him to do something. When there's nothing to do, I've told you what to do. Nothing. And that's what you're doing. You're whipping back and forth here. I can't answer a question when I don't think there's anything that should be done. That's my answer. Platinum, I'm friendly. Higher lows, higher highs over the 18-week average. I can see where the market wants to pop up here. Dollar index, I'm the big bear. Yet I'm telling you, you're not embedded. You just hit the Bollinger Band between 101.11, you're not there, you're 101.73, and the 100 level, the 100-week average. That's where I think the pros are going to take their money off the table. If I'm wrong, it'll be here. But you're not embedded. And you can't embed next week or the week after. It can't be done. So I'd be very careful. You're getting a little ahead of yourself, and I'm the big bear in this market. So when I put it all together, try to give you ideas on what to do, and that's what we do here. Try to put things together. Now, one of the things I want to remind you of, if you go to the site here, from now on, when you come in on YouTube here, if you want to, you can subscribe to my morning videos by joining right here. That's how you get in. So if you hit those, that's different than these free ones that you're seeing, and that puts you right in. A lot of you don't want to go to our website and deal with that, and that's fine. You can do it through here, and we have people that are already doing it. So that is something brand new for you. What else? I want you to join me this coming Thursday. So what we're going to do this Thursday is we're going to have our live webinar. Now, I had said last week we'd hold it, and it was my fault. I sent out to the few people, I thought I did, that had registered from the one day I said it last week, and then I sent out no other invites, in fact, at all after that. I said, no. I just realized we have the Passover, we've got Good Friday, let's pass. Too many people traveling last week. We'll do it this coming Thursday. So yes, this is on April 13th. It comes on at 12:30 p.m. Central Time. I cover stocks, ETF, futures markets. How do you get in? And it is free. Move your cursor up here. You'll see an icon. Give it a click. Sign up. You will get from us then your password, your user ID, and there'll be a link in there. If you have certain markets you want me to cover for you, write me right in that link. It comes to me, and I'll prep the charts, and they'll be covered. I'm Ira Epstein. Thanks for watching. Have a great Easter. I'll catch you all come Monday. Take care.